Missing records is a common problem when you're doing crypto gain reconciliation, and you ultimately have to estimate it. One point of view is, well, you can't prove what it is, it must be zero. Well, we all know you didn't get the coin for zero. All right, so that's inherently wrong. You can have to estimate it.
Well, hello, everyone, and thank you for joining us on this very special AMA episode of the Clinton Donnelly Show. I'm your host, Mona, and I'm here today with the president and the founder of Crypto Tax Audit, Clinton Donnelly himself is here. I'm sure, Clinton, you are just getting bombarded with questions already, especially probably this year, because after the crazy wild year we had last year in 2022, people must be just asking a lot of questions this year.
There are a lot of concerns. People have a lot of worries and fears. They fear it's a down year. It's interesting. A lot of people say, oh, I lost money last year, but actually, all they lost was unrealized gains. When they sold it, they actually made a profit. So that's a little bit of a surprise for some people. I think maybe the biggest question people are asking this year, Mona, is they lost money in any number of, BlockFi, FTX, Celsius, UST, Luna. There's so many areas where people have lost big investments. Some of my clients have lost millions. Is there a way to make some tax benefit out of that? Is there any way to capture some glimmer of redemption out of such a loss?
Absolutely. And all those topics that those are our topics actually of today's discussion, those key points that you just mentioned. So many collapses, so many people lost so much money, unfortunately. And this is the year that it's going to get accounted for. And people are concerned. They want to know, how do I go about these $1 million losses, $100,000 losses, even $1,000 losses? That is why we are here today for Clinton to answer your crypto tax questions. Specifically, as you were talking about crypto gain calculations, that's a huge topic that we're going to have to address. Something we all have to do is to calculate our crypto gains and losses. And we know there are companies out there in the past few years or a couple of years, I want to say, that are providing these services. This is such a huge factor in filing our taxes correctly, because we need to be able to add up all these losses and gains. And frankly, I'm not going to go through all my transactions on Coinbase to try to figure this out. So I'm going to rely on these third party companies to do that for me. But it's a whole mess there too. So can you talk to us about this whole crisis that's happening amongst these service providers and what the issue is and how are they not calculating our gains and losses correctly, especially with NFTs and DeFi?
The issue here is that these services vary in the amount of accuracy that they have. In fact, if you go to their websites, none of them claim to be accurate. In fact, they disclaim it at all in their warranties. They all talk about ease of use and how many exchanges, blockchains they support. But the real question is, can you accurately calculate? The answer is a crisis. For example, we had one client, he did a lot of trading. He would say about 300 trades on centralized exchanges. The year of data was 2021. And we put the same APIs and CSVs into all like 10 different services. And just the transaction counts all varied one from another. Now, there's some reasons why they can vary depending on whether you see something as one transaction or a buy and sell as two transactions. But the answers range from 170 transactions to 26,000. They all have the same amount of data. How can they come up with such wild range of numbers? I mean, half of them way over 1,000 transactions. I can't really account for how they came up with their numbers or what is a transaction. But when we move through over to the question of how much gain was there, and we use the same calculation methods and we reconciled it with our own accountants the same way, but they still came up with all different answers, ranging in this particular example, which is typical. We did many, many benchmarks. So this is just one. He had about $70,000 in gain to another one. We had $800,000 in gain. That's, it's like 11-fold difference.
Wow. That's
Here's,
not even
let me
on the same
Yeah,
planet.
they're not in the same planet. So a couple takeaways on this, and I can explain why, but a couple takeaways is do not report on your tax return an amount of gain if you don't believe that's a real number. I mean, each of us have like a range we think we were in. You kind of know how much money you had. And if your answer you're getting from this gain calculation service isn't falling into that space, go use a different one. Go use another one. Use 3, 4. At least you've done due diligence. And if at the end none of them are right, you should probably still consider reporting your own number because that's probably close to an accurate number. These services are all over the map, literally all over the map. I'll give you an example. Say if all you did was trade on one exchange, like Coinbase, all these services would probably come up with the same answer. But it's when you start moving between private
Mm,
wallets and other exchanges that we lose connection to the purchase price, the cost basis of a coin. So, for example, you bought a coin for $100 3 years ago and you
mhm,
moved it to a private wallet. You decide, hey, it's time to sell. I move it to Kraken. And at that time that I move it in, it's worth $500. A week or two later, I sell it at the price of $550. How much gain did I have? Well, because we know the
mm,
history, we know that you had a gain of $450. But if you were using the coin tracker tool, when they don't know the price, they use the price on the date you moved it into the exchange. In our example, $500. So Coin Tracker would report a gain of only $50. That's nice. That's a low
mhm,
number. You'd like that. If you're
mhm,
using Zen Ledger, if Zen Ledger can't find out what the original purchase price is, it's going to assume the price was zero. So Zen Ledger is going to
mm,
say the profit was $550 or 11 times more than what Coin Tracker is saying. The real number is 450. All right. If you use either one of those answers in the coin trade, you're underreporting if the IRS audits you. If you're using Zen Ledger, you're going to be over-reporting. Each one of these services does this to simplify the work for you as a preparer because reconciliation is tough. But at the same time, these introduce certain types of errors which can get extremely distorted. So yeah, it's a real crisis, and you should be very careful.
Clinton, what is how where's the issue coming from? Is this a ledger that's still very nascent? Is it that we need these bridges that connect chains and bridges will then have to keep track of these transactions? What's missing here?
The missing issue is layer one blockchains don't record purchase price.
Mm,
We really have to wait for like a layer two or layer three protocol that actually would retain the purchase price and maybe some tax indicators about that transaction. So, for example, I acquire a coin. The blockchain does not record that price in terms of US dollars. It doesn't know what fiat currency you prefer. So it just knows on a certain date you got that coin. We go back, look through historical charts. We go, oh, on that date, Bitcoin was X price, and that's what you got it for. So since that, when we move then that coin from, say, the first exchange to a private wallet, the purchase price information does not travel with it. The original acquisition date does not travel with it. And then when I go to the second exchange, it doesn't know the original acquisition date, doesn't know the fiat price. And so either these services try to make it easier for you by suggesting a price. Their basis for
mhm,
suggestion is incorrect. These reconciliations, as my reconciliation manager said, most people have no idea what they're doing when they use these
mhm.
reconciliation tools. So I would say if you're someone who made, let's say you made several $100,000 in profit, you really should consider using an outside firm to calculate it. Somebody who's a professional and experienced at doing the reconciliation.
And you have that professional right here, guys. So, and there are not many of them out there. I'll tell you that right now. And that is the truth. Thank you for that explanation. And I want to talk about another situation that we had, especially last year. And that situation is now triggering the idea of theft losses instead of capital losses. Can you also talk to us about that situation? A lot of people were affected. I mean, people lost hundreds and hundreds of thousands, millions of dollars. How does that situation affect US taxpayers this season?
That's a great question, especially when it comes to losses. The tax law limits how much we can claim in terms of capital losses in any given year. So you have to pay, if there's gains, you pay taxes on all the gains. But if you have losses, this would reduce your taxable income. You're limited to a
Mm.
$3,000 write off of capital losses in any given year. The excess is rolled over to the next year. Well, when you have massive losses, I have some of my clients had $1 million of losses. $3,000 is poor compensation. Now, if you can classify something as a particular type of theft loss, then you don't have that $3,000 limit. You could actually reduce your taxable income way down. I've had some clients where we brought their taxable income down to zero, paid no taxes. So it's very attractive. What does it take? Well, because of the Bernie Madoff crisis in 2008, 2009, IRS came out with what they call a criminal fraud loss deduction, where all I have to do is show that the promoter of an investment was indicted by a federal or state government or agency. Do Kwon in 2023 was indicted by the SEC. Right? Indicted might be a
Mhm.
strong word, but a legal charge was filed against him.
Yep.
And that means that when charges happen, that is basically the proof that a theft occurred. And then you can write off the amounts that you'd put in, less anything that you'd gotten back from the investment. So that's very attractive for someone who invested in UST or other stable coins, because you put in 20,000 into the stable coin, you can take a $20,000 loss on it. If you had invested in a currency that had gone up and then crashed, you only deduct the amounts that you put in. But this whole treatment would apply in 2022, which is the taxes we're reporting now. This would apply for FTX,
I was just gonna ask.
BlockFi.
BlockFi, yeah,
BlockFi was taken
Celsius,
down by misdeeds by Alameda
yep,
Research.
Celsius.
Celsius, Celsius, technically the organizer of that was indicted. You could definitely write it off in 2023. You might try writing it off in 2022. Just if you have something like that, you can write it off on form 4684 part C. I just mentioned that for anybody who's saying, where do I go? But yeah, it's a big deduction, and it's a great way to get a silver lining out of your losses.
Such a relief that is. I mean, it's not, but it kind of is because I mean, we had a lot that went on last year. And this brings me to the whole circus around the exchanges collapsing last year as well. And the lack of access to user cryptos and even lack of access to transaction records. Now, with traders being locked out of their exchanges, what should they do to report their crypto gains, or more likely in this case, crypto losses?
Well, if you have missing records is a common problem when you're doing crypto gain reconciliation, and you ultimately have to estimate it. One point of view is, well, you can't prove what it is, it must be zero. Well, we all know you didn't get the coin for zero. All right. So that's inherently wrong. You can have to estimate it. How do you estimate something? You go like, well, I think I bought that coin in February or May of 2020. All right. Let's go back to coin market cap. What was the price of that coin between February and May of 2020? And you're going to look at a range, and you have some justification for picking a reasonable number out of that range and go with that number. Is it exact? Is it the right answer? No, but it's a whole lot closer than any other guess. So this is our tax returns are complicated, and short of having a whole squad of accountants doing your work, the best you can do is be close to the right answer.
Yeah.
If you can't be exact, do your best. The law requires us to
Yeah.
do a good faith effort, and that might involve guessing.
And that's all you can do. Do your best. How do we calculate gains and losses when using a ledger? Very good question. I have my ledger sitting right around here somewhere. How do I do that?
Well, on a ledger, there is a way to export your transactions. I'm not sure about the format. I think some of the gain calculation services can interpret a ledger import and export. But what does a ledger tell you? It just says, on this such date, a coin came in, another date, coin went out. So, you're not typically selling things on a ledger. You might sell on other wallets, but not on a ledger. It's difficult. What happens is you don't import the ledger. You have exchange one, you've moved a coin out. We don't know where it went from that record. And then later on exchange two, we see a coin has come in. It may have gone to a hard wallet in between. So you have
Mm.
to kind of draw the lines with the reconciliation tool. The reconciliation tool will be trying to sell something, and you have to make sure it's connecting up with a purchase price.
Wow, that's thank you for that. If a stable coin depegged, can I also deduct those losses?
You can deduct it if you sell it. So you
Mm.
had USDC and you sold it when it dropped down to 95. That would be your sell price. You would have had a $5 loss on the number of coins you had. I have a colleague of mine, a friend, who he lives for those events. He lives for aberrations in price, things like that. And he sets buy orders and sell orders when things drop. So he watches for spikes up and down on pricing, and he'll buy and then sell when it returns back to zero. So when he does, he sells it back at the $1 price. So this is where, it's a way of scalping. You're going to make a scalping, you're going to have a profit or a loss, and they all add up to be your net taxable gain at the end of the year.
So thank you for being here and sharing your knowledge and expertise. And I hope people who are listening at home, you reach out to Clinton and his team. And folks, be sure to check out Clinton's podcast again, The Clinton Donnelly Show. That's every Tuesday on Spotify, iHeartRadio, YouTube, and Rumble. You can follow Clinton on Twitter at Crypto Tax Fixer. Thank you all for tuning in. Remember, you have to file your taxes. And as Clinton said, do the best you can. And if you need help, you know who to call, cryptotaxaudit.com. Until then, remember, taxes are sexy.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.